Hello everyone, welcome to my YouTube channel, André Cardoso here. Thank you very much for being here and for following my work. I wish you all a wonderful day trading the market, and for those who are learning, I wish you all a very productive day learning your process. And I'm here today just for a fast update for the charts that I shared yesterday with you. So I will not cover all those 30 pairs that I shared with you yesterday. I will just cover a few of them, and at least those that I think are more relevant at this point. So there's a small list that I want to share with you, starting with the S&P. I shared yesterday that the potential bounce for S&P based on these crab and shark patterns projected inside this box. So I called your attention, as soon as the market enters this box, we should pay attention for potential bounces for S&P. So, and basically the market has found the most recent resistance was formed at 33.01. So basically that was the most recent resistance and the previous structure fractal support. So we have the previous support acting as resistance, reinforced by a new fractal there. So we never know if the market will, if that pattern will trigger more upside momentum or a huge momentum from here. But it can happen. It can happen for S&P to find that support as a trigger for at least a retest of the previous structure highs, the weekly fractal, or actually the daily fractal below the previous structure highs, and then if the market violates that daily fractal, eventually a retest of the highs. But we never know if that will happen from here. In fact, we have this resistance now putting some pressure at equities at this point, and let's see how the market will behave from here. But as I want to share that specific crab pattern, because I called your attention yesterday for that price zone, and as we can see, the bullish crab pattern working very well at this point. Not completed, because we need the price to achieve the default target or the default expectations, which did not until now. So crude oil, I shared yesterday the potential retest of this daily fractal. So basically we have a new fractal support here, the most recent fractal support, a 4 hours fractal. Where is my resistance? We have a fractal resistance there, and the daily resistance was adjusted to these previous structure highs. So we have we are trading inside this range, this small range between those fractals. I was expecting the retest of the previous structure high. So the market has found support a few points above these highs, 50% Fibonacci retracement reshoot. So I will not be surprised with more bullish momentum for crude oil. We have a nice retest of these lows there. Let's try to project the next patterns above. So first of all let's measure this small retracement, and let's see if the market fills the default criteria. So 38% Fibonacci retracement as the most recent resistance. Actually this is like this, so I need resistance above and support below. So as 38% Fibonacci retracement reissued as resistance, we are now threatening that Fibonacci level again. And the patterns that we should search for, basically there are 3 possibilities here for crude oil. One of them, the default bearish bat pattern, so the so-called M shape or W inverted W shapes, bearish bat pattern at 88% fib right below the daily fractal. So that pattern to work needs to respect the daily fractal. A false breakout above 113% Fibonacci extension, and then if that fails, we may see a retest or an approach to the daily to the weekly fractal resistance printed above. So bat pattern, alt bat pattern, and eventually a extended crab pattern at 168 extensions. So for that to happen, we need first of all to trade above the 4 hours fractal resistance printed at 39.79. If that happens, that may trigger a retest of this previous structure highs, actually without ignoring the previous structure supports. We should not ignore these lows. Let's go into blue. We should not ignore the potential. This is also a golden Fibonacci retracement, so or a major Fibonacci retracement level. So we should not ignore the potential for a retest of these previous structural lows, and then if the market decides to keep trading lower, that may happen also. So, but in terms of patterns, we need to wait for the pattern to form. If that happens, we have the hedge at our side. We have the probabilities of the pattern in our side, which allows us to define the risk for that setup, and which allows us to get involved if that is the objective at that point. So if for those who are searching for a short opportunity for crude oil, eventually a retest of this previous highs, that may work as a double top, eventually a retest of the daily fractal. But for now, it's too soon to predict. The market can start to sink from here, and that which will completely invalidate these eventual patterns projected above. So let's wait and see. We are now we are now threatening again the most recent resistance level. Let's see what crude oil will print for us. Now I want to go into those dollar, Norwegian krone, and Canadian dollar, CHF pairs, and also the dollar versus the yen. I shared yesterday the potential for that pattern to complete at 932,600. So basically the 168 extension, multiple golden Fibonacci extension levels. Actually, the market has found also a nice resistance there at the golden Fibonacci retracement. So this is a major retracement Fibonacci level, and right above this trend line. So we can face this as an ascending wedge, and a breakout above eventually will force a fall from those highs. Let's wait and see. We are now facing the bearish shark pattern, the golden Fibonacci extension levels. The default target for those patterns is 50% Fibonacci retracement level. So don't be surprised to see a sink into the previous structure support levels. We have targets projected at that fractal support at 90134, so that is the default target for the shark pattern, but don't ignore the eventual push above and the eventual 224% Fibonacci extension as another pressure zone above. So first of all, we are now facing this. So what we are now facing is the bearish shark pattern at 168 extension. So basically we have the Norwegian krone threatening with a bearish pattern, threatening more or threatening a fall from those levels. If that happens, we may search for one eventual cipher pattern also at 78% Fibonacci retracement. Obviously too soon to predict, but the Fibonacci ratios that we have at our disposal at this point may suggest the cipher pattern if the price decides to fall. Obviously, if the price decides to start to fall from those levels, and eventually a breakout below those fractal supports, and we will start to project that cipher pattern there at 78% Fibonacci retracement level. So that's what I want to share with you for the Norwegian krone. We are now facing the bearish shark pattern, so I will not be surprised with a retracement from those levels. The Canadian dollar also trading above the most recent resistance and daily fractal horizontal fractal resistance. we are the edge and shoulders target, default target, still projected above. We should not ignore the retracement from these levels if that is the objective for in general for the dollar. We may see also the Canadian dollar trying so if actually related with oil, if oil decides to retest those highs that I shared moments ago, and yesterday also, if that happens, we may see the Canadian dollar entering again this channel or recovering this structure, not a channel, but recovering this structure, and obviously if that happens, that may increase the probability for more downside momentum. But let's wait and see. The default target for the pattern is still projected above. We should not ignore the eventual retest of that trend line as support now, because it was a resistance and it may act as a support, and if that happens, it may trigger more upside momentum for the pair. Obviously, as I said before, recovering those resistance levels may increase the probability for more downside momentum, and this is just a question of probabilities. No, it's only that we need to identify the pattern that offers you the best probabilities for a reaction that we already checked on price history. So we already know what the market tends to do after forming those patterns. So let's wait and see. Also, a retest of the fractal resistance may offer more upside momentum. At the other side, a recovery of those fractals may increase the probability for more downside momentum. Then we have CHF. I still believe we are heading to this eventual ABCD pattern, and we are now threatening. Actually, we have violated the most recent fractal resistance, and we are already approaching the monthly fractal support. So note that fractal support was printed on March, and we are now approaching that previous structure major support level, the monthly fractal support. Again, recovering that monthly fractal may print that ABCD pattern, and then a retracement is expected as soon as the price completes the pattern. The Kiwi, I shared yesterday the Kiwi threatening this major trend line support. We are now trading below that trend line support, and we have already a pattern projected at the daily fractal support. So we have a bullish shark pattern projected at the daily fractal, which can extend to the 224% Fibonacci extension. So that, let's not ignore that possibility, and the eventual retest of the weekly fractal support. But for now, we are approaching the previous structural lows, and actually we are trading the 200 moving average, but breaking below that 200 moving average and a retest of the daily fractal will put the price trading the golden Fibonacci extension, which is a default bullish shark pattern completion point. Now, we again, and I can't get tired to repeat this, we never know if the pattern will complete. We never know if the pattern after formed, if the price will react accordingly to the default expectations, but that is where the pattern will complete, at least for those who are searching for opportunities to go long with the Kiwi. I'm sorry. Eventually, we should wait for a retest of these previous structural lows, and if there's a bounce, eventually the market will respect or will react accordingly to that, accordingly to the default expectations. So we will target the 50% Fibonacci retracement level as a default target, which will put the price again threatening the weekly fractal resistance. Weekly fractal resistance was printed last 31 July, and it still it was recovered already. So as you can see, so the market has violated that monthly fractal, that weekly fractal, and the monthly fractal also, and both of those fractals have been recovered. So basically, I will not be surprised with more bearish momentum, but we should not ignore that golden Fibonacci extension projected at the daily fractal and the potential bounce from that price zone. The Australian dollar also facing the 88% Fibonacci extension, as I shared yesterday. We need to go into a lower time frame. So we have kind of not a double top, not a double bottom, obviously, but we have one eventual false breakout below these lows. If that happens, we may see the price reacting and searching for an extension above. So as I used to say, after a false breakout, we should always search for the golden Fibonacci reversal, which is the 160-180 extension. So and basically that will print the one minor, let's call it a minor shark pattern at the golden Fibonacci retracement. But for now, we need that bounce to happen. We need to wipe this most recent fractal resistance printed above. Let me just adjust those levels. Fractal support, it was here, previous structural lows, false breakout below. There's a false breakout below, so the market has retested the daily fractal support and it has started to bounce from there. We have the most recent fractal resistance printed at these highs, 72.35, so breaking above these structure highs, eventually the market will search for that Fibonacci extension level, and we should pay attention for the completion of that shark pattern, which may offer more, at least this should offer another retracement. So let's wait and see. Australian dollar also trading between those Fibonacci levels that I shared with you yesterday, the 88% Fib and the 113% Fibonacci extension, as the completion point for the bat pattern and the alt bat pattern. As always, when you trade the bat pattern, we always should respect that 113% Fibonacci extension. Obviously, that will depend the risk reward that the pattern will offer you, but if possible, we need to we need to adjust our stops below that 113% Fibonacci extension, because it may act as a false breakout below, and then a bounce should happen after that happens. So again, crab pattern projected below. If the price decides to fail support at this price zone, we may see the Australian dollar, Aussie, trading even lower from this price zone. Let's wait and see. For now, as I said, we are trading the bat pattern, or the alt bat pattern, if you want to consider that, but I consider this as the bat pattern, and basically I'm waiting for a retracement. The retracement, as always, 38% Fib from these structural lows, and those levels may act as, what I've done here, so I need this Fibonacci, I need default targets, and I need these at red. So those levels may act as resistance pressure levels. The first one, the 38% Fib, obviously this is the bat pattern, so basically that is the first target, and the second target at the golden Fibonacci retracement at 72.82. So basically, I will not be surprised to see a shark pattern printed at the previous structural lows, and eventually a few points above, retesting these previous structural lows, the golden Fibonacci retracement, and obviously, let's consider this as a cluster box, or a zone of interest between the golden Fibonacci extension and the retracement level. So don't ignore the possibility for more downside momentum. We need to wait for a violation of the most recent fractal resistance above. If that happens, that, as I said before, that will increase the probability for more upside momentum, but at this point we should wait. The bullish bat pattern, if you want to for those, let me put the thing like this: if you want to get involved on the bat pattern, and it doesn't mean it doesn't I'm missing the expression here, I'm sorry. When we engage the bullish bat pattern, we should respect those Fibonacci levels. So for those trading advanced pattern formations, I believe they already understand the concept and the risk reward. But for those who are learning process, when you trade the bullish pattern and when you target the 38% Fibonacci retracement as your first target, and let's assume the bullish pattern completed at 88% Fib, so let's adjust our targets from that completion point. So we have now the Fibonacci retracement adjusted to the most recent lows, but the initial target was from the completion point. So as soon as the market completes the pattern, we will target the 38% Fib. So we don't assume the market will rally from here. So we assume the market will trade the 38% Fibonacci retracement as a first target, which allows us to identify the maximum maximum risk for this setup. And the maximum risk for this setup is nothing more than a 1-to-1 risk reward maximum. If that allows you to set your stops below the 113% Fibonacci extension, even better, because we will respect also the potential false breakout below the daily fractal and the eventual bounce from that level. If that is possible, even better, but no more than the 1-to-1 risk reward approach from the completion point. Then you need to make some adjustments. If the price keeps falling below your completion point, we need to adjust our retracement tool to the most recent lows, and our targets should be adjusted also. So initially we engage the market from the 38% Fib. So as you can see, this is your reward. Obviously, using a 1-to-1 risk reward approach, this is no longer this is no more a friendly risk reward situation, because you will lose more than what you will win, compared with the starting or the initial targets or the initial reward that you defined for this setup. I believe you understand what I'm saying. So if you engage the market at 88% Fib, you will target the 38% Fibonacci retracement. But if the market decides to print new lows below your initial or below your entry, you need to adjust your targets also, because if the market decides to trade the 38% Fib, the 38 is already positioned at a few points below your initial target. So you need to make those adjustments, and that's the risk when you trade a 1-to-1 risk reward approach. And let me repeat that process, because I want that to be clear for you. Okay, let's ignore for now that Fibonacci extension. So bullish pattern projected at 88% Fibonacci retracement, we will trade the market and we will expect 51 points as a reward. So we will adjust our stops as a 1-to-1 risk reward approach. So this is similar to a situation like this. So we have our stops positioned there, we have our initial targets there, and then the market pushes below your entry. If the market pushes below, you need to adjust your targets and look at what will happen to your risk reward when you use a 1-to-1 risk reward approach. So you will trade for 32 points and your risk is already 51 points. There's one option, which is, okay, if the market sinks and starts to bounce, I will adjust my my stops into a 1-to-1 risk reward as soon as possible. That will help me to protect my capital if the market decides to fail the pattern, because it has failed support at the completion point, the default completion point for the pattern. So if the market decides to ignore that level, we should adjust our targets, and as soon as possible we should also adjust our stops into a 1-to-1 risk reward approach. And then obviously if the market decides to bounce, we will maximize our profits at the golden Fibonacci retracement, and in that case we will trade the 1-2 risk reward situation. So we will put at risk $1 and we will win $2 for that setup. So that is how I used to adjust my setups, and if the market decides to to start to trade against me, we need to make some decisions. Obviously, we already know where the market will fail, where the pattern will fail. Trading below the 113% Fibonacci extension, it makes no more sense to get involved or to be here, and we need to exit our trade as soon as possible. So basically, Australian dollar, more bearish momentum expected. Attention with that, because we are now trading below this major ascending channel, so I will not be surprised to see more downside momentum. I will not be surprised to see the crab pattern printed there at 168 extension, and that is the pattern that I'm waiting to see. I want to see the price approaching this monthly fractal, and as soon as the price approaches that level, or as soon as the price actually approaches the crab pattern at 168 extension, I will start to pay attention to the price action and the market conditions, and try to make my decisions once the price approaches those levels. I don't want to. I'm not saying the price will not bounce from here. It can happen. Let me just check. We don't have a clear. There's a small divergence between the most recent lows, the previous 4 hours fractal, and the most recent lows, as we can see here, but that doesn't mean the market will bounce. So we have this bullish divergence at this point, but this is not granted at this point. I will not be surprised to see Australian dollar in fact sinking below that daily fractal. Let's wait and see. The price, as I shared yesterday, the price that I'm waiting for, or the pattern that I'm waiting for, is an extension to this price level. Dollar versus the yen, I shared it also yesterday, I believe. Golden Fibonacci extension projected at 104.36, and default target for the pattern was already adjusted to the most recent low, so I was expecting the 104.97 to be reached. As we can see, the market has found some pressure at the previous structural resistance. We have already the most recent fractal support printed at the bottom, and this is one eventual inverted edge and shoulder. So I will not be surprised to see more downside of a few points below to form the right shoulder, but that is eventually the one eventual inverted edge and shoulders. Projections for the pattern, if that happens, if the market decides to violate this fractal resistance, obviously we have the weekly fractal support a few points above. So if the market decides to recover that support, that may offer a nice target for the edge and shoulders form. Actually, the golden Fibonacci, the 200 moving average. Well, we have a decent target for that edge and shoulders. So we have one first, let's call it an inverted edge and shoulders pointing to 105.57, 200% Fibonacci extension, and the 200 moving average, but also this eventual or potential descending trend line resistance. So I will not be surprised to see dollar versus yen being pushed above the weekly fractal support, and eventually achieving the default targets for the pattern, the crab pattern printed at the golden Fibonacci extension, and the default projections for the inverted edge and shoulders being reached at 105.56. So that is what we can expect based on those patterns. Euro versus yen, I shared it yesterday. Edge and shoulders, a breakout below that fractal triggering the pattern. The default target for the patterns still projected to 122.26. So I shared it yesterday, that completion point for the shark at 224. There's a nice reaction around that Fibonacci level. Again, don't get surprised with the potential bounce from this price level without breaking the most recent lows, but we are now threatening the previous structure support level. So basically, I will not be surprised to see the price reaching the default targets for the head and shoulders printed above. and then eventually a bounce from that price level. We never know if that will happen, as I said before, but the probabilities for that to happen after reaching the default targets will increase, and we should pay attention for that eventuality. So imagine a situation where the price will be pushed a few points below the completion point or below the most recent lows, and a bounce from those levels if the market decides to search for the 38% Fibonacci retracement, which is my default target for all those patterns. If the market decides to search for that 38% Fib, so we may see the price retesting the previous structure support again. Let's wait and see. So I will not be surprised to see Euro versus Yen searching for that default target for the heads and shoulders, kind of ignoring the bullish shark pattern, but it may put the pattern at work after reaching those default targets. Australian dollar versus the yen, I published it yesterday and I shared it with those who were here. The 127% Fibonacci extension as the bullish butterfly completion point. It's still possible to print that pattern. 74.83, the pattern still projected there. We are now threatening that eventual trendline support, but there's another one that I want to call your attention for, which is let me delete this one. It's a channel between covering those closes and ignoring those wicks, those wicks above the close price. And if you pay close attention, it's the same as a line chart for those who don't be aware. If you plot those close prices on a candlestick pattern, it's the same as plotting a line chart. And basically what we have here is a descending channel and a retest of the channel as resistance. So basically, and the weekly fractal support, it's now a resistance. So basically, I will not be surprised with two things: a false breakout below and a bounce without completing the pattern, so right from the most recent lows, and the eventual formation of the bullish butterfly pattern, which is the pattern that I'm waiting for. So I need the price to print a new low, kind of a 3 drives, one, a second, and a third drive eventually may offer some bullish momentum if the pattern gets completed. Actually, if that happens, we have two patterns there. We have the three drives formation converging with the eventual bullish. The bullish butterfly pattern. So pay attention to 74.83 for the Australian dollar versus the yen, and the eventual recovery of, let's adjust these 4 hours fractal already recovered here, and the 4 hours fractal resistance there. Okay. Again, recovering the fractal resistance may increase the probability for more upside momentum, and if that happens, this will be considered as a false breakout. And as I said before, a false breakout should be followed by the 161.8 extension, and we will search for the shark pattern projected at the daily fractal. So basically a retest of that fractal support, 76.18. Two options. One of them, three options. One of them, stay out of this trade or this pair at this point and wait for the formation of the bullish butterfly pattern and a new low and a third drive formation, or you wait for a bounce and a retest of the daily fractal, which may offer you a retracement to the 50% Fibonacci level. So that is your default target. So don't expect to trade and to make huge profits from this trade. The default target, it's the price that you should target, the 50% Fibonacci retracement level. So that is what I'm expecting for Australian dollar versus the yen. Those are the three options. One, the three drives: the bullish butterfly pattern, or stay out and wait for the shark pattern projected above. The New Zealand versus the yen, another one with a crab pattern projected at 69.02. So that's suggesting one approach to the weekly fractal. I believe I shared this yesterday. So we're still a few points far from or a few points above that price level, so we need to wait. Nothing very specific at this point. New Zealand versus the Canadian, I shared with you the possibility for a bounce from that 78% Fibonacci retracement, saying okay, we should not ignore the potential for a bounce from that major 78% Fibonacci retracement level. We have the crab pattern projected a few points above. So basically, I want to see a recover of that fractal support, and eventually the market will retest the previous structural lows, the previous daily fractal printed at 79.81. So that will not be a surprise if the price decides to bounce from these levels. And to finish with the euro versus Australian dollar, I shared yesterday that bearish cipher pattern. What is this? 50%. No, I don't need this. I need that pattern here, but I need to change the visibility for that. So basically, we have the cipher pattern and a retest of the highs, rejecting to trade above it, which keeps validating the pattern. So the market needs to close above the starting point of the pattern to invalidate the pattern. So we're still trading the bearish cipher pattern, and we need to make adjustments, as I said before. So the 78% Fibonacci was ignored, new highs, 38% Fib, it's now projected at 162.59. So that is what I'm expecting. I want to see the price achieving or reaching those default targets. Since we have also a false breakout above the most recent high, so we have the first high and then a push above, we can see these also as well one eventual edge and shoulders there. But let's not get focused on this for now. Let's start to project patterns below. So since we have a false breakout above, as I said before, after a false breakout, we search for an extension below, in this case below, and we will search for the potential shark pattern again, the golden Fibonacci extension projected at 162.16. So, and that will complete the bullish shark pattern at the golden Fibonacci extension level. So let's wait and see if that will happen. That will put the price trading a cluster box between the golden Fibs retracement level and extension level. So if that happens, we should pay attention to that price zone. And this concludes my my approach for today. I hope you enjoy. I will try to update those charts tomorrow, and eventually other instruments too. Well, and stay well. Everything, all the best for you and your families, as always. I wish you all a very profitable and wonderful day today, and see you the next time.